Here at Post 9, we have Joe Terranova, Shannon Sakosha, Jason Snipe, and Steve Weiss. First, we're going to do a quick check of the markets before we begin the conversation. You can see a bit of a muted day right now. The Dow up 1/3%, the S&P and the NASDAQ up very fractionally right now. And really, that's where we got to start the conversations. Joe, surprised we're not seeing the markets move higher after what we heard from Secretary Lutnick, the announcement that there is a deal when it comes to export controls on tech to China, rare earths to the U.S., and seemingly that would kind of move supply chains on both sides.
That would indicate that it was priced in already. And I think, in fact, the market expectation is, I said a couple of weeks ago, we've become desensitized to all of the tariff negotiations. And I think the market believes ultimately that there will be some form of a reasonable outcome that will comfort markets. I think we learned that well the weekend of May 9th through May 12th when you had the Geneva Convention with the Chinese. So it's steady as it goes. It seems as though it's a very calm environment so far this week. You have the VIX now somewhere around 16. You have the narrative surrounding the broadening out thesis expanding to areas of the market that were further unloved, such as small caps last several days. It appears as though you're seeing some capital go out of momentum into small caps. Overseas markets remain remarkably strong. You have Mexico up 17%, Brazil up 13%, Germany up 20, Spain up 22. You have the Hang Seng up 21, India up 5. So there is this narrative that you can diversify in this market. You're seeing the broadening out. It was reflected earlier in the year in broadening out with sector ownership. And now it looks like we're doing it beyond that geographically and by equity size class. That's a good thing for markets in the near term.
I feel like we're jumping the gun talking about the Fed already. A lot to digest today. By the way, we're just showing bond yields easing back quite a bit. Earlier today, about 5 a.m., I believe the 2-year was above 4%. Now it's at 3.96. So really sentiment, not a big move, but a sentiment level. Steve Weiss, I want to come over to you. Before we get all the way to the Fed, let's talk about U.S. fiscal policy. In fact, Barclays was talking about it earlier today, saying in part that they expect choppiness ahead, but we're past peak uncertainty. They go on to say we see choppiness over the near term as the markets await clarity on U.S. fiscal policy. Spending and tax bill, obviously, is what they're alluding to. And with Q2 earnings likely to feature the first hit from tariffs, they also think that peak trade uncertainties also in the past agree that Q2 earnings, that's where you're going to see the tariff impact. And then also, we're having like a lot of uncertainty, and the markets are waiting for some resolution there, really from the Senate. What's the Senate going to say about some of these proposals?
Look, I agree in part with what everybody's said so far, but except for what you said about earnings being good. Earnings aren't going to be good.
Well, I think that's what Barclays is saying. We're going to see a hit there.
You are. So if you forget about the report today in prices and you look at the leading indicators, one of those being duty bonds. So when you import into this country, you've got to pay what the anticipated duty is to, in a bond, get in the bond for the government and then ultimately pay that off. I can tell you, talking to people in that industry, those bond prices and what they've got to cover for the duty have been extraordinarily high. They've gone up by 10 and 20 times because of the value of it in terms of the bond costs. That will come through the economy. Now, you can't, and so what we've seen so far, we've seen a lot of front-end buying in expectation of tariffs. What we got today is, yes, part selling the news, but the other part of it is there's nothing new coming out of it. So while you're saying the CapEx, a little bit of a hint that it's going up, frankly, CEOs are still frozen. They've got no clarity on what duties will be, what their CapEx will be, et cetera. So I still think we're in a time of uncertainty. And I go back to where the market was, 6 months ago when we were talking about, or 8 months ago, 10 months ago, when, we had a course that the market's fully valued at 23 times. We didn't have any of this, uncertainty. There's always uncertainty, but this mega uncertainty. So, look, I'm pretty fully invested. I'm actually looking for an opportunity to lighten up because I just don't think that the story is as good as what we're seeing. The market is a lagging indicator. As I look at the forward indicators, I'm not really impressed with what I see. Now, offsetting that is that we seem to have a different cohort of investors this time. I've been saying this for a couple of years, where they're used. If you come to the market since 2008, and older investors have aged out, so if you've come into that time, all you've seen is a V-shaped recovery,
right.
And so you're immune to volatility. So I think that's actually a good thing.
Let me just interrupt for a second. We actually just saw the Nasdaq and the S&P both turn just very fractionally lower right now, but seeming to lose some momentum as we're talking about the investors that are here right now. Do you think people, I guess now positive again, are people digesting something? I mean, it's only a fractional move, Joe, but what do you make of that? Just turning negative in the last couple of minutes.
It doesn't mean much.
Doesn't mean much.
I think it's a very quiet day. I don't think there's much to trade off of. I don't think you had if you're bullish, you really didn't get the response you were looking for on the tariff news with the U.S. and China. You didn't really get the bullish response that you were looking for as it related to CPI this morning. It seems like muted trading activity, almost like a summer environment. But let me just comment and respond to one thing that Steve is highlighting. And I think that the biggest risk to the market and where the market will stumble in the third quarter is if we lose the tailwind of earnings, because let's remember something, that has been the dominant tailwind force for this recovery since the fall of 2022.
So you're saying that the Q2 earnings is already baked in, that we're going to see the tariff hit, and investors aren't as concerned about Q2. You're saying it's in Q3, or you're saying the impact of Q2 earnings?
The upcoming earnings reporting season.
Got it.
If there is earnings disappointment, I do not think the market will be able to ignore that and to continue to move higher.
You know, there's one other point. Citi was reported to have added hundreds of millions of dollars to their loan loss reserve. So they're anticipating higher, defaults or late payments. So you got to look at those signs. If you just focus on what the market's done, I think you're making a mistake, or that we're 2% off the highs. So, look, I don't know if it's this quarter, if it's next quarter, but clearly PPI is a more important number than CPI. And then you get the Fed, and to your point, I don't see the Fed doing anything. I don't even think they changed the language at all.
Another part of the tech trade right now is chips. Our data team just actually sent out a note. Now, this is an odd data point. I'm just going to read it anyway. The SMH, the chip ETF, of course, is having its best 44-day period since 2002. It's one of those ESPN stats like best shooting on the third Wednesday in December. It's one of those kind of things, but still best 44-day period since all the way back in 2002, so over 20 years. What do you make of the chip trade right now?
Well, here's where I am. One of my large positions continues to be Taiwan Semi, and they just reported it's another great month, up 40%. That's where I play it. I think it's also the most reasonably valued here. I take a look at Broadcom, good company, but I can't pay that valuation. One could buy Taiwan Semi with, I would argue, even better fundamentals. Nvidia, Nvidia, I still own some, and I just wonder if we're going to see that trade down again, because the pressure on them to continue to put up great quarters when you've got others in their backyard, like Meta developing their own chips. But semis overall, I mean, that's as good an indication of which way the economy is going to go. Right now, it looks positive, but I'm going to bet that's not the case going.
Joe, we got to talk to you about NVIDIA. As part of today's deal, we get the rare earths. They get a loosening of export controls. Seemingly, that would mean NVIDIA chips.
It would, and look, I've talked at length over the last several weeks about the importance of this recovery rebound that we're experiencing in semiconductors, and you attach some actual statistics to it. But really, it's significant because that is kind of what's lifting markets here towards these all-time highs. And I think there has to be a degree of sustainability in that. What I'm witnessing as it relates to what the momentum factor is doing in semis is it looks as though it's kind of beginning to moderate somewhat after it was very intense over the last several weeks. A couple of names where we still see very strong momentum would be KLA Corp, Applied Materials, and Lam Research. NVIDIA is actually maintaining its positive momentum as well. But there's been some other semiconductor names where you've seen that intense momentum of the last several weeks begin to kind of moderate somewhat, and that's worth keeping your eye on.
All right, Jason, you also own NVIDIA, also Qualcomm. As we talk about the loosening of the export controls, again, seemingly that helps NVIDIA, or at least leads to more NVIDIA revenue going to China. What do you think this means for Qualcomm as well?
No, I think it's a big deal, and I think the story for me with Qualcomm is this recent purchase, to improve their AI infrastructure, which I think is going to be huge. Like, again, the Qualcomm story is they continue to diversify revenue streams, whether it be IoT, whether it be automotive, and others. So I continue to like this name. What the innovations of Snapdragon I think is crucial. And as we look at this Apple deal coming to an end, I think they've done a great job of telegraphing where that's going to end and continue to diversify revenue sources over the last several years.
All right, great time to talk about the Mag 7 as well. Shannon, what's your view on this basket of stocks? Up for the last 3 weeks. If you look at the charts, Tesla's been one of the big gainers in the Mag 7, shares up over 30% over the last couple weeks, despite, I don't know the word to call it, the fight with the president. I think that's putting it lightly when you call it a fight, even though Elon Musk apologized. Apple, a laggard, actually negative over that 3-week period. What do you make of that basket of stocks?
Yeah, as I mentioned earlier, I think that there's going to continue to be dispersion here. So if you look at some of the challenges that Alphabet is facing, you saw the announcement of some layoffs, and that was covered in the earlier show. I think that, if you look at what came out of Apple yesterday, there's going to continue to be, a wait and see approach as it relates to their AI, their AI opportunity. But I do think that, for investors, and this is actually similar to something that Steve said earlier, the draw of those strong balance sheets, the draw of that continued higher absolute earnings growth is continuing to have the investor, particularly the retail investor, very much focused on these names as part of their portfolio. So I think they're an important group. I do think that there's going to be some dispersion. And again, I would acknowledge and probably advise investors really not to trade them as one cohort, and rather look at this underlying momentum, particularly around the AI trade. I do think that this group, perhaps absent Tesla, is going to continue to trade on AI enthusiasm or criticism. And so I think that it's important to acknowledge that there might continue to be some volatility as that narrative unfolds.
If I had to rank them based on relative performance, relative strength, it's clear to me that Microsoft, in the process of rebuilding positioning and sentiment, has been the strongest. It's reflected in the expression of making most recent really a new all-time high. Second, I would place Meta. Meta appears to have similar type of strong momentum in the near term, where it wants to move towards that all-time high. And you can make the argument for NVIDIA and Amazon potentially being able to do that as well, though for Amazon it's a little bit more of a challenge to get to that level. The other names that I didn't talk about here, they're struggling. Even though Tesla has had the recovery, it's struggling. Apple post WWDC is struggling as well. I think it's slipping below $200 as we're speaking. So I don't think the totality of the Mag 7 has the dominance that it had in 24 and 23. And guess what? That's actually a really good thing, because that means it's a healthier environment, and that allows you the opportunity to try and create some alpha if you can and outperform the market.
It's so funny that you say that. I was actually talking to some other money managers. They're saying people are going away from the triple Qs and the SPY because of that over concentration in the mega cap tech names, and just looking for more exposure to other parts of the market. But we're going to focus on one of those Mag 7 names right now. Joe, I got to ask you about Tesla. Huge month for Elon Musk and this company. Robotaxi is supposed to start in Austin. Is this a real inflection point for this company, or do you think there's still that quote-unquote cult of Elon that's going to continue to invest in this stock and believe in this company?
So I'm going to be very authentic and very humble here, and I'm going to tell you, a lot of times people will come on the network and just pretend to know something about everything. It is such a complex story surrounding this company, and I spoke about this on Monday, and what I said on Monday is I don't have the ability, because the strategy that we're implementing, it's rules-based, it's non-discretionary, and we look at a universe of 500 stocks. If I could say, let's look at a universe of 499 stocks, I would do it, but I would have to change the SEC prospectus, and that's a big process to do it. I can't do it, but if you have discretion, I just don't understand. Look, it's a great company. He's a phenomenal innovator. He's one of the best business person in the world, but there's such complexity to understanding how you navigate the volatility. And just when you think the volatility simmers down, no, it reemerges once again. So I don't know, it kind of overwhelms what is maybe a technology story related to Tesla itself. And it puts me in a position where I'm almost uncomfortable speaking about it because I feel uninformed.
It's not like you, Joe.
No, but I do. You feel
Yeah.
uninformed speaking about it because you just don't
You're a
know.
lover of Tesla or you're a hater. And
But you don't have to be. That's a choice. But can I run something by you, Weiss?
I
Run
don't
it
think
by
it is,
everybody?
though. I actually don't think it is.
You don't think it? I mean, that's such a visceral reaction.
You could hate it. Not just because of all the things that Joe talks about, because as a fundamental investor into why I want to own this company, it can be rather difficult to navigate.
You can't own because of valuation.
I'll tell you what, if it's love or hate, tell me who's right. So Piper came out, reiterated overweight, $400 price target. Then Guggenheim came out reiterating sell 175 to 170. Directionally, who's right? Is it Piper or is it Guggenheim?
Here's what I'd say. This does not trade in fundamentals. It never did. It's always expensive. It's
Fair.
a capital-intensive
We talked about the cult of Elon.
It's a capital.
But is it 175 or 400, Weiss? Which one's closer?
Look, I think that you've got enough sycophants and people that have posters of Elon Musk on their wall that just want to buy the stock and just don't pay attention to fundamentals.
All right, Snipe, 400, 175.
Hold on, let me just finish. So if you took Musk's name off this and put somebody else there, and Musk is a story, granted, you'd say capital-intensive company, allegedly a CEO who can't stay away from illicit drugs, right, where the board, as reported by the Wall Street Journal, was going to conduct a search. There's nothing going for it. Robo-taxis are a crowded space. They don't have the front edge there. Robots are a crowded space. They don't have the edge there. So what are you going to do?
All right,
right?
so neither for you, in all fairness. Snipe, 400, 175. Which one's closer?
I think it's 400. I mean, again, to Joe's point, it's a very difficult story to understand in certain respects. But if I just kind of look at it simply, his refocus back on the business, I think, is an important catalyst. So I see it going higher.
Shannon, you said it was love or hate. I'm going to let you go. 400, 175. Which one's directionally closer?
I cannot opine on that.
All right, fair enough. Restrictions, compliance and restrictions. All right, Weiss, we got to go to a break. Coming up next. All right, welcome back to Halftime. We got some committee moves to get to. Weiss, going over to you. You boosted your exposure to industrials.
Yeah. And I don't have a lot of exposure there, but I bought XLI and I bought Caterpillar. And here's the reasons. What if I'm wrong? I'm known to be wrong every once in a while.
Occasionally.
So if I'm wrong, then the economy is doing okay. I really don't believe it. I bought these and also to balance out the portfolio. I mean, my largest positions are Meta, Microsoft, Netflix, Taiwan Semi, and that's where they'll continue to be, and I think those are all-weather stocks. So, look, CAT was just pretty cheap. I thought it was a good way to play it. I've always, I've generally played it through Deere. Deere, I thought, just moved up, and right now is too expensive an entry point. So it's as simple as that. It's just, I wouldn't call it a hedge because I'm not reducing exposure anywhere, but to participate if the market looks through the economic malaise to the Fed easing going forward.
Is this also a play on the idea of a U.S.-China trade deal, tariffs easing? And
part of it was that.
Okay.
I thought Taco was still out there and in play, and it still is, obviously, from the news we got, and given Bessent the ability to negotiate away our hold on chips, right? So he's looking for an off-ramp, continues looking at an off-ramp, and that would make the CAD attractive.
You got some thoughts about the industrial trade?
Well, the industrial sector is the best performing sector so far year to date. JOTI ETF has a significant overweight to that. There's some stocks in there that are performing remarkably well. GE Aerospace, RTX, Axon, which made a 52-week high. Even Boeing looks to have some near-term strength as well. And then Howmet Aerospace performing well. It's interesting because the ITA, which is the defense and aerospace ETF, that continues to move higher, but yet a lot of the defense names, and we own some of them, Lockheed Martin, General Dynamics, Northrop Grumman, they are struggling. So it's not that defense component.
Yeah.
It's really the aerospace component that continues to move higher.
And I'd say a bigger position than those. I'm up marginally in CAT and XLI, basically flat, because I just bought it last week. FTAI continues to do well. Stock continues to act like, spectacularly well. Momentum's there. So that's what I like.
Just a side note, a friend of Halftime, Brian Belsky, actually neutral on industrials. He says the fundamentals, they lean slightly negative, at least in his opinion. All right.
Okay.
We're going to move on to our calls of the day. B of A is bullish on Goldman Sachs. They reiterated a buy rating with a $700 price target. A lot of bank ownership here on the desk. Joe, I'm just going to start with you. I mean, what do you make of this call?
I've had ownership of Goldman Sachs for the better part of the last 4.5 years. David Solomon has done a remarkable job in just really navigating a significant turn in the business, moving away from some of the consumer-facing businesses that they attempted to move towards, going back to what ultimately is their knitting as it relates to investment banking and trading, and doing it remarkably well. I think it's restored that reputation. I often use the example Goldman Sachs is likened to the New York Yankees in baseball. They have that very strong tradition and reputation, and I see no reason why I'm going to be selling this position anytime soon.
All right, Snap, you own Goldman as well. By the way, coming off some comments from Jamie Dimon, obviously from JP Morgan. I don't know if they're the Red Sox or the Mets. I don't know what they are in that analogy, but worried about the economy slowing down. Is that something that you're worried about impacting Goldman, if Jamie Dimon's right, of course?
I mean, I think as it relates to Goldman, I think a couple things. I mean, Joe just mentioned getting out of the consumer basis was big. They cut that loss. I think that was super important. As it relates to kind of the economy, yes, of course. I mean, as a broad take, I mean that would hurt all the banks. But they are right in that IB space, which I think they're the best of breed there. Trading revenue has done phenomenal, particularly in the first quarter. You saw that really seismic shift there. Revenue was up 6%. The stock is up 9%. And again, as comments earlier I made, just thinking about the M&A cycle to start potentially later this year or early 2026, I think is a catalyst for the stock.
Weiss, I know you own it too, right?
Yeah, I do. And I was at they have a family office conference each year for just the top clients. I tell you, you get a chance to meet the people. I know a lot of them. I agree with what Joe says about David Solomon, but I'll tell you that, and I mean this, and I'm trying to think if I'm wrong as I'm saying it. I haven't met a person at Goldman Sachs on any of their business lines that I'd say, they made a mistake hiring this person. So the bench is extremely deep. What's amazing is the average age of the firm is sub 30. So there's a lot of growth there. It's a really, really deep bench, and they are poised. There will be an underwriting cycle. There will be an M&A cycle. And for them, they're the purest play on that. So they will do exceptionally well.
The setup on Oracle reporting after the bell tonight. Jason Snipe, you own this one.
Yeah, the stock's been on a run since April 21st. It's up almost 43%. And I think in the last quarter, the concern was around supply constraints, for infrastructure, AI infrastructure build. So they have about 130 billion in RPO. RPO revenue was up 63% last quarter. So let's see if they can monetize that. I think some of the news that we heard today out of China and releasing of export controls, I think will be positive for the stock, but that's going forward. So I continue to like this name going into the print.
You should love it, up 43%, man.
Of course, man.
Excitement.
Weiss, you took the words out of my mouth. Is this the momentum trade you guys were talking about? I mean, does Oracle symbolize? You took the words out of my mouth. Does this symbolize the momentum trade that you guys were talking about earlier?
It does. It's in the It's in our momentum ETF. It's in a lot of other momentum strategies as well. For sure.
Weiss, you're excited about it. Next move from Weiss.
I'm excited for my friend.
It might be Oracle. Final trades are coming up next. We're going to see what Weiss is really doing. Coming up for final trades, Steve Weiss, you're up first.
QXO. So I bought some more QXO last week. Haven't been on the show for about a week. When they completed their additional fundraise. So look, Brad can raise a lot of money. He used that to pay down debt or make acquisitions. This is a long-term play. 10 years, this stock is going to do what other Brad Jacobs stocks have done, go up and up.
Shannon Sakosha.
Energy. So it seems a little bit counterintuitive given the fact that oil prices have been pretty range bound, but we have some optimism around natural gas and around the inflection of economic activity in the second half of the year.
Jason Snipe.
Evercore, M&A cycle and deregulation coming back in vogue. I like this one here.
GOT with the last word.
And that would be Charles Schwab, which has had a remarkable recovery from where it was in March in 2023.
All right, that's going to do it for us.
Hello, everybody. Welcome to Blue Cloud Trading. My name is George. It is Wednesday, June 11th. The market is closed. It's 4:50 p.m. And you can see the index says here we're down today. They actually started off pretty, they were up the majority of the day at around 1:30 or so. All of them started to drop, and we just saw, I'm going to take a look at these in a second. We're also going to look at the heat map. We're going to take a look at the sectors. We're also going to take a look at the 17 stocks that they talked about on the halftime report today. That was the show that we just, some clips from the show earlier today. And it was, the market was actually up while the show was taking place. But like I said, by the end of the day, the majority of the stocks were down. We're going to also take a look at the index ETFs here, including the Europe ETF, FEZ. Let's take a look at the Mag 7 stocks and some member requests and some of the strongest sectors. And we're going to do it very quickly. We won't spend too much time on each one because we're covering a lot here, okay? And I want to keep these videos relatively short. I don't want to go too long. So we're going to use the Ichimoku indicator. And what we're essentially looking for is for stocks to be above the Tenkan-sen, the green line, the 9-period moving average, above the 26-period moving average, the Kijun-sen, they call that. We want the Chiku span, that white line there, to be above price 26 periods ago. What that white line essentially is the closing price from today, projected 26 periods ago. You'll see that's where you'll find that white line. We want price to be above the Ichimoku cloud, as you can see right here, and above the 2 moving averages. We want the faster moving average, the green line, to be above the red line here. We do also want the Senkou span A, the lighter colored blue line, to be above the purple Senkou span B. That gives us a very, very bullish outlook as far as the Ichimoku indicator is concerned. And you can see here on this chart, we've got all of those things happening with the Dow on this time frame, the daily. And remember, I tend to look at both daily and weekly. During the week, I'll be covering most of the daily charts and occasionally switch it over to a weekly chart as well, maybe even to a 2-hour. But I also use this other indicator called the directional movement index here. And what that essentially does is it measures momentum. So like the white line that you see there, it's called the ADX. Now I've got it at a setting of 9. It's a little faster than the traditional setting. And then I've got the directional movement index also superimposed here, which is comprised of the positive DI9 and negative DI9. Now, again, I've changed the settings to 9 versus 14 on the directional movement index. What we want here is the green line to be above the red line, and we want the ADX to be moving up. All right. We don't want the ADX to be moving up if we see, like, for example, the red line above the green line back here. Over here, for example, where the white line started to move up, if we just project it up towards that level, you'll see what happened to price right after that. Ooh, it just dropped, right? And price was also under the moving averages here, under the Ichimoku cloud, and that's never a good idea to be buying stocks when price is under the moving averages or under the cloud. You always want to wait for things to start to show some positive momentum. And price, basically breaking through some levels of resistance, like the 200-day moving average, that dotted yellow line right there, and breaking through prior highs, like that 428.65. So that's what we have here on the Dow. Now that you understand the rules of what we're looking to do, it's kind of like a game, really. We're looking at these, or a puzzle, maybe. Not even a puzzle. It's just really like a picture, essentially, of each of these ETFs and stocks that I'm going to be covering. And at a glance, which is what Ichimoku stands for, it's a Japanese indicator. At a glance, we'll be able to assess where we're currently at and whether it makes sense to consider adding a position or not, basically. Okay? All right, so look at the Dow, 0% today, okay? Did not really move that much. In fact, let me just take a quick look at these index percentages here. It was, like I said, Dow down, it was at 0%. NASDAQ was down 0.5%. S&P 500 down 0.27, and the Russell 2000 was down 0.41% today. Here's the heat map. You can see how the stocks performed for the day. Apple and Amazon were down. Google, Meta were down. Broadcom was up 3.38%. NVIDIA was down 0.79. The energy stocks really excelled today. Look at all that green right there. Some of the tobacco companies like Philip Morris. Okay. Some of the healthcare plans like UNH were up. And if we look at the group screener, which is essentially the sector performance for the day, you'll see energy was up the most, 1.6%, where consumer cyclical was down 0.94. Here's a 1 week performance. Even on the 1 week performance, energy is up 4.94. So there's certainly a sector rotation because energy was not doing so well last month. That's for sure. Okay, it was up 3.49%, but communication services, technology were the leaders. So let's now get into, and I just want to show you guys a quick article here. China's easing of rare earth curbs is only for 6 months. I don't know if you guys heard about why. Basically, the reason why the market kind of started tanking towards the end of the day is because there was some more information about the deal or whatever type of negotiations were taking place between China and the U.S. And basically, what it says here is China will ease the curbs on exports of rare earth minerals for just 6 months. 6 months, that's a half a year, of a new trade understanding with the U.S., according to the Wall Street Journal. The move could add more uncertainty for American manufacturers, particularly the auto industry, which has been pushing for easier access. The journal notes that the move gives China leverage down the line if tensions ratchet back up. So if, for example, at some point, Donald Trump decides to increase the tariffs once again, which is very likely, then they can certainly just pull the plug and say, okay, no more of the rare earth materials for you guys, or minerals. And so, yeah, basically, Chinese negotiators agreed to the temporary restorations of the licenses after the latest round of talks with their American counterparts in London after 2 days of intense talks. So after 2 days of intense talks, they were able to negotiate to just extend the rare earth minerals for 6 months. That's it. It's temporary. In exchange, the people said the U.S. negotiators agreed to relax some of the recent restrictions to the sale of China of products such as jet engines and related parts, as well as ethane, component of natural gas. Okay. All right. And there, here it says Lutnick. You can definitely say China tariff levels won't change again. All right, we'll see. Anyway, let's get into the technical analysis now. So, like I said, Dow Jones looks good on the daily time frame. FEZ, the Euro stocks, looks pretty good too. It was down 0.13%, but still holding up above the moving averages in the Ichimoku cloud. That's what we want. It was down 0.13. Russell 2000 came up on the daily chart, reached that 200-day moving average, and reversed. That's not really a big surprise. This is a very, very strong level of resistance, the 200-day. And so there you have it. It's pulling back now. Now, as long as it stays above the 209.27, okay, I think we're still going to be in bullish territory on that time frame. But remember, there's also one more other thing I would recommend that you folks do. If you're going to be looking at the daily time frames, always check the weekly as well. Why? Because it can give you a completely different picture of what the longer term trend is. And the long-term trend right now tells me that we're once again finding resistance at the under the cloud. We're developing a reversal candle on the weekly chart. And so, this is not positive for sure. And we'll keep an eye on that. The QQQ ETF is coming close to a prior high over here of 540.81. That would be the all-time highs for the Qs. And so that could also lead to, it's obviously going to find resistance there. We'll see what happens if it pulls back or not. Here's a weekly chart. There it is. It's starting to slow down, as you can see right there. Starting to slow down a bit, and we'll see what happens. How about the SPY? The SPY is also moving up. It still has a little bit of room. It's got another 1.77% before it reaches that high of 613.23, which is that prior high right there, which goes back to February 19th. And then we've got the VIX. Now the VIX jumped a little bit, 1.83%, not a lot. It's still in a very low range at 17.26. And so we want that to be in a low range. It is conducive to a stronger market when the VIX is dropping and staying at these levels here. If it starts to spike, like it has in the past, back here in April when the tariffs were announced, you can see that big spike that happened, reached around 60.82, and then the market, of course, dropped like a rock, as Tom Lee would say. CNBC stocks. These are the stocks that I talked about on the show. All right, let's get into these stocks as well. I'm going to actually prioritize them by the strongest stocks by hitting this little flag button here. You can see the blue flagged ones are the ones that look the strongest, and the ones on the bottom there, and what I mean by that is they're strong on both the weekly and the daily time frames. And that's one of the things that I do is when I'm doing my analysis of stocks, I'm looking for stocks that are both strong on the weekly and daily time frames before I add them to my Blue Cloud portfolio, which I share with members. So, all right, Broadcom, AVGO. And by the way, this is a stock that I just added today on June 11th. Why? Because number one, it popped up on my scanner. Number two, it's a stock that I'd like to own. It's in the semiconductor space, and semiconductors have been showing some strength, as you'll see with the SMH ETF that I'll do analysis on in a few minutes. So there's the daily time frame. Here's the weekly chart. It's broken through a level of 251.88 as well. All of the elements of the Ichimoku look strong here on the weekly time and on the daily time frame. Now, if you guys want to follow along on this trade of mine here, one way to do that is to hit the join button on my homepage, Blue Cloud Trading, and become a Blue Cloud Legend level member. This is where you'll find that join button. All right, just click that join button there. You'll see there's 3 levels. You would need to become a Blue Cloud Legend level member to get the daily trade updates that I post, and I post them once you become a member. There'll be a new tab popping up here next to posts. It will say membership, and you'll click on that and you'll access it. And when you want to see all the member only videos that I also produce, okay, you can basically scroll down a little bit. You'll see all the videos here. They're usually about an hour long, and I go over my entire portfolio. And so yeah, consider becoming a member of the channel, and of course subscribe. If you haven't subscribed yet, click that subscribe button. All right, let's get back to the charts now. So yeah, AVGO, I like it. AXON, this one I already have a position in. I added that one back on June 5th. They talked about that on the show. It was up 2.06%, giving a nice little buy signal right there. Once again, there's the daily, and here's the weekly chart, still looking strong. And then we've got GE Aerospace. This one looks pretty good too. The only problem is the last few days now, since Tuesday, it dropped under the Tenkan-sen, but it made a nice run up, as you can see here on the daily time frame, and it still looks good on the weekly. But it did find resistance at a monthly level, the 256.61. So if I switch the time frame from weekly to monthly, and we go back in time a little bit, that's where that prior high is right there. I got it circled. Okay, that's that level. The next one up is 291.09. So if it can break through the 256.61, then you've got a potential of 15.5% target, a new target of 15.5% away at 291.09. But right now it doesn't look that great. As you can see, it's starting to pull back a little bit here. And there's a daily chart for you. We'll see what happens with that one. Goldman Sachs looking pretty good. Here's the weekly chart. You see it just crossed, the Tenkan-sen crossed above the Kijun-sen. That's very bullish. The Senko-span A just crossed above the Senko-span B on the weekly chart. And on the daily chart, it's looking pretty good too. Okay, so that's a nice little setup right there. KLAC, okay, KLA Corporation, another Joe T. He likes the high momentum stocks. This one is also doing pretty well. This one is looking a little bit extended up here, but weekly chart, you can see here we've got some potential for it to move up some more, obviously. We'll see what happens with that one. SMH looks good too. Now, SMH is the ETF for the semiconductors. And I talked about this recently, about this little consolidation box here. I said if price got above, once it breaks through a consolidation area like it did right there, expect it to expand to the upside. The next target is 283.07. So I wouldn't be shocked to see this move to that level, and that's about another 7.5% away. TSM, I'll show you what the weekly looks like too, because it just recently started getting bullish right there. See that crossover, bullish crossover of the faster moving average above the slower one, and the future cloud is not quite there yet, but the Senko-span A is moving up, and it looks like it's probably going to get there. The directional movement index down here, the green line is above the red line. Okay, so a lot of these things are starting to come into play basically. TSM, Steve Weiss's final trade on the weekly chart. It's been moving up for multiple weeks now. Let's look at the daily chart. So it's stalling at a prior level here of this candle. Going back to January 31st of 2025. It's the 215 level. And notice how it stalled right there and created what's called a spinning top. That's a reversal candle. That little candle that you see there, it looks a little bit like that right there. Okay, a bearish spinning top, equal length on the top and bottom, and a small little red body, and that's bearish. So that might pull back tomorrow. I'm just saying, It doesn't always. It's just a higher probability, basically. But we'll see what happens. Applied Materials is AMAT, is a ticker symbol. This one for a second day stayed above the 200-day moving average, but it also created a spinning top. So I wouldn't be jumping in on this one here based on that candle after that move up. A spinning top, by the way, can also be bullish, but it has to happen after a decline. So like here's a bullish. So if you see the price dropping, and then it develops this type of spinning top, and ideally you want to see it have a bullish color, right? Green versus or blue, like I have here, versus red. But this is more bullish if it happens after a bottom, like right here. Do you see that spinning top right there? So it declined, and then you can see what happened. It just took off from there. So this is Caterpillar. CAT is a ticker symbol. That's the daily chart. Looks pretty good, and the weekly though is still inside the cloud, so it doesn't meet the criteria that I'd like for both time frames to confirm. And then we've got EVR, which is Evercore. That was Jason Snipes' final trade. On the weekly chart, it's inside the cloud. On the daily time frame, it's reached its target of 200, the 200-day moving average, and it's more than, well, it needs to break through there. So I wouldn't be getting into this stock until it proves itself, right? It needs to break through that level first. And of course, for me, I wouldn't be jumping into it anyway. It's inside the cloud, so it doesn't, not something I'm interested in. Same thing with FTAI, which was Steve Weiss's final trade. On the weekly chart, it's been moving up recently, but it's inside the cloud on the weekly. On the daily time frame, it's dropped under the Tenkan-sen. General Dynamics is under the 200-day on the daily. On the weekly chart, it's under the cloud. No on that one. HWM. Here's a stock that I had recently back here on, I had added this position back in April 23rd and closed out of it on May 2nd for a 19.3% profit. Obviously, the stock continued to continue to move up. I thought it was a bit extended at this level here because it was so far away from the moving averages. But yeah, sometimes price can just keep going, you know. Let's look at the next one, Oracle. And so like right now, what I recommend with HWM, it's under the Tenkan-sen, so I would hold off until it pops back above on the daily chart there. On the weekly chart, it still looks pretty good, except that red candle forming. Oracle on the weekly is above the cloud, but moving averages are not correct here. Tenkan-sen is under Kijun-sen still. And the daily, it looks bullish, except for that reversal candle right there. QCOM, another reversal candle. So today was a bad day in the market. And when you've got, you know, like I said earlier, you've got something like this happening where it starts off nice and then drops towards the end of the day. And you end very close to the prior day's close. And we look at Dow exactly at the prior day's close, right? That's doji right there. So, yeah, not conducive for a continuation of the upside. And we got some negative news. I mean, that there really wasn't a major deal that took place there with China, except for the 6-month extension, really. QXO, Steve W's final trade back on December 19th and January 15th. This one has, let's look at the monthly on that one. So he was recommending this back in December 19th. So let's look at the monthly chart. And he recommended it in his final trade on June 11th today. So actually, let's look at a weekly chart maybe. Yeah, it's like, it hasn't, let's see here. January, it's moved about 10% since that level. Oh, no, I take that back even more. You know what? I can take a look at this through FinViz. Let's take a look at it here. QXO. Let's look year to date what it looks like. Be easier. It's up 25.47% for the year. So it's done pretty good. Sales are increasing. A lot of shares outstanding here. 409.43. Let's see. Average sales quarter over quarter is negative though, but the EPS has improved. Okay. All right, let's keep going. So I'm not something I'd be interested in. As you can see, it's under the cloud on the weekly, but on the daily time frame, it is showing strength. Got above the 200-day and looking pretty strong there. There's the January, or popped above the cloud right there. It's moved up 35.7%. If you bought it right there on that breakout above the cloud, price was above the Tenkan Kijinsen. That's a, oh, I take that back. That's a 43%. Wow. Yeah, 43.48% since May 8th. So this is a very volatile stock. I'd be really cautious with something like this. I mean, just since June 4th, it's moved up 15.85%. Very volatile. These can be scary because if it drops, it's going to also be a big drop. Just to reach its next support level, it's about 7.3% away from the Tenkan, or 7.9%. Okay, so be careful with these types of stocks. The beta is 2.84, so it's like almost like trading in like a three times ETF, right? Like the TQQQ or whatever. All right, let's see. Next one, XLE Energy was up today, up 1.45%. Here's Shannon. That was Shannon's final trade. It looks good in the daily, except for the fact that it's under the 200. It needs to break through that prior high right there too. On the weekly, however, it's still under the cloud, but it's showing a little bit of strength. That's all. Let's go to Mag 7 real quick. Microsoft. Okay, looking good on the weekly chart. You can see it broke above the monthly level of 468.35. Microsoft, folks, is hitting all-time highs. Never been at these levels before. It's doing really well. It looks good. And you can see it's kind of building a little bit of a base here on the daily chart. This little, see this, these last 4 days, it's kind of stuck in that little range there. So I'd probably want to wait for it to break through that just to get a little bit more confirmation, honestly. NVIDIA is under the 143.44. It's kind of going stagnant here. It's down 0.78% for the day. And on the weekly chart, it's starting to show more strength. Like it might pop through soon. We'll see. Google on the weekly chart did, get above the cloud, but the Tenkan still needs to cross above the Kijinsen on the weekly chart. The cloud needs to become bullish. We don't have that yet. And the Chikou span is still underpriced. On the daily chart, however, it looks more bullish. You can see it's a faster time frame, and so things happen quicker here. If we switch it to a 2-hour, you can see that, it's been in a nice trend for a little bit. Tesla, also looking pretty good on the daily time frame. However, on the weekly, we've got the Kijinsen right there waiting. It's just about 7% away from that resistance level. I'd be very cautious there with that. Amazon on the weekly chart is above the moving averages, but the Tenkan is under Kijinsen, and on the daily time frame, it looks pretty bullish, except for the fact that it dropped 2.03% today. Apple dropped 1.92. This looks very bearish to me. I don't like this one on the daily. Why? Because it broke and closed under the cloud. So that's very negative. It was inside the cloud for multiple days here, and that's never a positive sign. Still under the 200. And look over here, down below, directional movement index is not giving you a buy signal either. In fact, it's giving you the opposite. It's giving you a sell signal. Why? Because the ADX is moving up, and the negative DI here is above the positive DI. If we go straight up, that's that candle. So that was a sell signal, if anything. And if we look at the weekly chart, it's also under the cloud. So you've got confluence and confirmation on both time frames that this is not looking good for Apple. Meta, on the other hand, looks much more bullish, more interest, more demand for the stock as it continues to rise. It was down 1.18% today, but it's still doing quite well here in the daily. And on the weekly chart, Tenkan is very close to the Kijinsen. It's not terrible. The cloud is becoming bullish, and Chikou span is above price. So there's just this part here looks like it could cross over pretty soon. The next level of resistance is 740.91, and that's about 6.3% away. Member requests. These are the stocks that were requested by our members for me to analyze real quick here. Intuit, INTU. Here it is on the weekly, stalling. This is not a good candle after a nice move up here. it's starting to stall. It was up 0.35% today. Here's a daily chart. It's stalling. So be careful. The other thing I'm concerned about is the fact that the ADX is now declining. That's going to be one of your first signals like, hey, things are starting to look a little bit iffy here. Why? Because back here where, for example, the ADX was moving up, see right there, and the green line was above, go straight up again, it led to that nice move. Now that it's got that sharp little decline there, and you can see it in the price, unless price can pop back above these highs right here, I think that you should be really cautious with Intuit. Here's the weekly chart. Again, that candle's not a bullish candle. And although ADX is moving up, the positive DI line is dropping right there. Marvel Technology Inc., MRVL. Let's look at the weekly chart. It is under the Ichimoku cloud. It's above the 200. It might be a short-lived move up here. Let's look at the daily chart. You know, it's been moving up steadily and slowly for a little while. You can see this little, okay, move right there. You get a higher low right there. You have another higher low right here. You get another higher low here and higher highs, right? So it's slowly stair-stepping its way up on the daily, and it's a nice upward channel. And here's a 2-hour. So you can see that it has, in fact, been doing pretty good on the 2-hour and the daily. But on the weekly chart, it's concerning to me. And on the daily, like I said, it's still inside the cloud and under the 200. I wouldn't be jumping into that one. Unless you're trading this on a much shorter time frame like the 2-hour. And even on the 2-hour right now, it's dropping. OKTA, Okta Inc. This one here has, let's see. It's under the cloud here on the 2-hour. On the daily, it's under the 2-hour. And on the weekly, it's under the Tengen-sen and Kijun-sen. So I would not be adding this position. Negative DI is above positive DI, and it's right under the 200-day on the weekly. And it's a declining weekly, so that's not good. FANG also on the weekly chart. You can see this long trend line here. So we'll come close to it. We might make it all the way here because we've had a couple of weeks here where prices moved up, and you might get another 4.5% out of this trade. But once you reach that level, there's a good chance that it could pull back again. No guarantees, of course, but you know it could happen. On the daily time frame, however, if we look closely, we'll see that it is starting to show more strength. You get the higher low here from the prior one, a higher low here from this low. And it's just kind of a nice upward channel. So just watch that channel and watch these trend lines. Maybe even switch it to a 2-hour, and maybe just use a trend line on the 2-hour time frame to help assist in you know, recognizing that the channel and this move is still, you know, to the upside. Essentially, if it breaks under the trend line, that's trouble. Under the Tengen-sen, that's trouble. And finally, the sectors, real quick. Let's take a look at those. Not all of them, but some of them, like GDX, Gold Miners ETF. Here's the weekly chart, looking very strong still, above the moving averages. On the daily time frame, it's just taking a breather here, it looks like. So nothing to do quite yet. Financials, it's above the moving averages, still looking strong, but kind of going, you know, just going sideways, really. In the weekly chart, same thing. What I'm concerned about here is if XLF starts to drop here, I can already see a pattern that's forming. Okay. I can see a pattern forming. It's a head and shoulders pattern, where this is the head here, the highest level. Here's the shoulder, which is lower. And here's the other shoulder that's lower than the high. Okay, so that's a problem. If price then drops under this low, that's a big move though, for it to happen. That's going to be a very negative pattern. Here's what it looks like on the patterns reference sheet. Right there. Okay, there's the lower. This is the shoulder, the head, the shoulder. If it breaks through the lows here, that's negative. Actually, there was one other stock I forgot to mention. AVGO. Was it AVGO? I'm trying to remember. Hold on. Is there one more stock in here? No. Oh man, let's see. I think it was AVGO. Let me just take a look at that real quick. No, that's not it. I already talked about it. Okay, forget it. Forget what I was just talking about. Industrials, they like industrials, right? Joe T loves industrials. It's done really well. Here's a weekly chart. It's had a nice run up. It's starting to stall a little bit at this prior high of 144.51. Today, it dropped back under that level. It's 144.24. Here's a daily chart. So when it popped above that level and broke that prior high, which goes back to that date right there, which was back in November of 2024, it didn't really happen with a lot of power and emphasis. This little candle is a spinning top, and that's a reversal candle. You don't want to see a reversal candle necessarily be the breakout candle above a prior high, because look what it's led to, this little decline right here. So I would just hold off a little bit before considering adding a position on this one, because it's starting to like weaken these last 3 days. Bitcoin, Tenkan-sen is under Kijun-sen, but it's still technically sound on the daily time frame and on the weekly chart. Problem is, it keeps stalling at this 109,286 level. So it needs to break through that. That goes back to this date, January 24th, 2025. So it needs to break through that level for a continuation and an expansion to the upside. XLC Communication Services is looking okay. I like this one. Here's the weekly chart. Tenkan-sen just recently crossed above the Kijun-sen. The cloud is becoming bullish once again. Daily time frame looks strong. So I like XLC. How about utilities? Utilities, not so much. It's still inside the moving averages here on the daily, and on the weekly it's stalling. IBIT is the ETF for Bitcoin. Same thing as the pair, the Bitcoin US pair. SMH, we talked about that one. This is the weekly chart on it. Started to show some strength. Gold is still in this little downward channel, but this is what this can be misleading, because it might look really, really negative, but you can sometimes have patterns, like in this case, I call this a bull flag pattern. So if you look, right, that's the flag basically, okay? And that is actually a bullish pattern. Now you might have a lower low here, okay, from the other low, and you might have a lower high here from this high, but they're not that far apart from each other, and that's what I think differentiates this type of pattern. Now, again, if this is the on the patterns cheat sheet here, let me just show you what that looks like. This is it. It's a bullish variant, and again, you can see you have this situation happening here. If it breaks through that level, expect it to move to the upside. So it's not a buy signal yet, but it looks like it's setting up to do that. And it's it's holding up right there too, above the 2 moving averages and the cloud. Guys, that's going to do it for this video. Thanks for watching. Don't forget to like, subscribe, and remember that it's easy to become a member. If you like the software, this software that I use here, TC2000, what you want to do is go right here to my homepage, click right here, 9 more links, find out a little bit about my channel, scroll down, and then there's a $25 coupon for the software. You click on that link right there. You can enter your email here. You can download the software. Here you see you'll receive $25 coupon towards the service. Here you can find out about the pricing. Okay. Click on the monthly right there. For example, it will tell you how much. I recommend the gold over the silver and platinum. What else should you look at? Maybe consider becoming a Patreon member. I recently created a video in Patreon where I went over the country list, about 24 countries. You can see I also superimposed my proprietary indicator, the Blue Cloud indicator, which takes the Ichimoku cloud, takes the Chiku span, but then the price is based on rules that I've established that will change the color of the candles. Makes it a lot easier. Like there's Australia, here's Poland, for example, Austria, just a few of them, just so you can get a sense. This is a 2-hour time frame. Here's a daily, though. On the daily chart, you can see there how powerful the indicator is and how easy it is for me to recognize what's going on with these. You can see all of these in the Patreon video. So, thanks again for watching. I will catch you guys all in the next video.